Good morning, traders. Welcome to this live intraday strategy webinar on SB Trade Desk. Today is Tuesday, January 31st. Michael Boutros here with you this morning. Pooja, Kanwal, Mark, Pete, Saful, Ziad, great to see you guys here in the room. Adam, Carlos, Gary, great to see you guys as well. So, last day of January trade. Expect some wicked price action. I'm kind of light on my toes here. I was just chatting here with Pooja ahead of the webinar. Things are kind of back and forth. I do have the dollar index coming in some near-term support, which we'll talk about in just a moment. Nat gas will add to the list, Conwall. I have the DXY, Sterling Kiwi at support, Aussie Yen testing near-term support. Sterling Yen, also an update on that. We want to touch base on the previous updates from Euro Key, Kiwi Dollar, and Sterling CAD from Sunday. And then we'll wrap up with Euro Dollar and Euro Oz. Just want to review those. Don't have any positions on them right now. Aussie Dollar is now on the list, Conwall. I was just talking to Pooja about that as well. I have Aussie at resistance right now. I'm having trouble getting really excited about fighting the dollar decline here, but if the Aussie breaks from these highs, I think it's game over. I don't really want to test the short side anymore. So we'll take a look at that, Conwall. Gary wants to look at gold for sure, 100%. We'll definitely check that out. The Abomination, dollar yen, sure. Got stopped out at a break-even trade on that too, trying to fight the long side last night. So we'll look at that. Okay. Okay, let's jump right in. So obviously you guys know what's on tap. Keeping in mind that tomorrow we do have obviously the Fed interest rate decision. No changes expected. What I did want to bring up before we jump into the dollar crosses is this. Interestingly enough, with the dollar coming off over the last couple of days, you've seen interest rate expectations, Fed fund futures, start to trail off. I want to hand over this site to you guys. You know how we've been tracking. I sent a link over in the message box there. You know how we've been tracking the Fed fund futures. This is a way that you can track it on your own at home. This is from the CME's website. And the way you read this, just a quick breakdown, guys, is these are the interest rate decisions in the calendar months. You can see that the June interest rate decision, which was above 70, now fallen to 67%. By the way you read this is 1 minus the current rate, which is 50 to 75 basis points. So this is the probability of a hold. Probability of a hike would be 1 minus this. So that gives us a current rate of somewhere in the range of 67% probability that we'll see a June interest rate hike. That's down from 70 plus. So you're starting to see interest rate expectations soften as the dollar continues to tail off. I'm getting a message that there's an issue with the audio. Is it just Conwall? Guys, can you hear me well? Shouldn't be having this issue here. Sound is all good. Okay, thanks. I was about to freak out. All right. Thanks, Theo. Carlos. Looks like it's just Conwall. Let me send him a message. Okay. So, you're starting to see interest rate expectations tail off with price. That's something that's encouraging, gives us further validation that the market is starting to kick out expectations for interest rate, i.e. weakness in the dollar is warranted. So keep that link handy that I sent over in the message box. You can see this updated throughout the course of the day and throughout the course of the week, so you don't have to wait for our updates on that front. With that said, oh, by the way, if we just go back to that real quick, the expectations for the current February 1st meeting tomorrow, 96 probability that we're going to see no change. Theo says, sorry, as interest rate hike expectations gone up? No, Theo, so they've dropped, right? The June expectation or probability for a hold was somewhere in the range of just 30%. Now it's 33. So there's a higher percentage rate, Theo, that they're going to hold in June. Or you could look at it as there's a smaller probability that they're going to hike. Either way, that's detrimental to expectations, and that should hit the dollar, as we're seeing here. Theo, does that make sense? This is the percentage of probability that they're going to hold. So this has gone up from 30 to 33%. He says, yeah, all right, cool. So with that in mind, and knowing that that backdrop is sort of hitting the dollar here a little bit, here's what the dollar index looked like last night. It's been pretty textbook. Before we look at last night's, here's the previous night's update. We were talking about this was into the close of last week. We were talking about this trade seeing a little bit more of a break here on a break of the weekly opening range high, looking for 101. Bearish invalidation, still 101.30, so we're still looking for shorts well below 101.30. Yesterday, you saw this thing rally right into 101, textbook, come right off. We cited that we were still looking for the bearish downside bias sub 101, and this decline right now saw a perfect tag of the 99.93 barrier. Okay, here's what it looks like on the intraday right now. Right there. So dollar index playing textbook through our levels. I was just talking to Pooja about this as far as the Aussie is concerned and some of the other crosses that we're looking at. Is this it? Is this a nice opportunity to play a rebound? I don't know. This is an objective break of the initial weekly opening range. You could see a rebound from this in overnight trade, but near term, you'd now want to respect resistance down here, right back at 100 spot 37/43. That's also the overnight highs, comes in just higher at 100 spot 50. But basically, if we're going to hold this formation, you'd expect to see some resistance on a rebound into this region. Subsequent downside targets haven't changed. And I want to bring your attention to a couple of targets here, and then on the daily chart, more importantly, 99.53 shaping up just as the January high day close. I'll show you in the daily chart in a moment. And then you're followed very closely by the lower parallel. On the daily chart, 99.53 converges on a whole ton of stuff. You have this median line parallel here, support, resistance, support, break. That should be some support. You have the January high day close, specifically the high you made on the 29th from last year. And you have the 100-day moving average sneak into that pocket. We were talking about this last week. They all line up right here. So before we get too excited about the subsequent downside targets in dollar index, 99.53 shaping up to be somewhat of an anomaly here that you want to just kind of keep an eye on. So near-term buy is still lower sub 100 spot 43, and you'd need to see a break sub 99.53 to really get this thing going a little more fervor. Key support down here, last year's open, 1618 extension, that's 98.70, 98.87. Gary says, when the U.S. dollar is moving one way or another, I often start to hear that the treasury yields are moving. How can I look at yields on MarketScope? You can't find it on MarketScope, Gary. You can find it on TradingView. The 10-year treasuries, you can get all of those on TradingView, not on MarketScope. So if you want to kind of check those out. And they will tend to move in tandem. Obviously, if the dollar is demanding a higher yield, then yeah, you'll see the market start to move higher. But be careful trying to correlate and trade those two intraday together, because there's going to be times where they diverge on an intraday basis in price action. And if we're really near-term trading, Gary, that's a hard correlation to track intraday and sort of use to your benefit. So I would just say take it with a grain of salt. Broadly speaking, on the whole, yeah, they will tend to move together, and they can definitely, when they diverge at the highs or the lows, a lot of times those can be major turns in market, but not a correlation that I track too closely intraday. All right. Any questions on the dollar index before we start to move off? Broader risk still is lower here. Levels unchanged from yesterday. Okay. Gary says, yeah, I hear about them a lot with regards to the abomination. They do tend to track dollar yen very closely. Dollar yen in general, the risk sensitive type of deal with our treasuries has always been the case, which is why, Gary, we always also want to highlight dollar yen as a major player during major economic releases, specifically non-farm payrolls, CPI. Fed interest rate decisions, obviously, like tomorrow. Dollar yen, because of its sensitivity to yields, will tend to be a big pair that the market watches for sure. All right, moving right along. That's the dollar index. Yesterday, we also wanted to give an update on sterling Kiwi. So the previous session, or the previous day, we had highlighted the sterling Kiwi setup on account of one different thing, on account of a couple different things, rather. 74.10 was the level that we had cited on the previous report as sort of a level of major resistance. You had basic trendline resistance off the highs here for the year, I guess, for the month as well, and a nice confluence of the basic 50% retracement, divergence into the highs, looking for a possible drawdown, ultimately looking to buy this thing, okay? With 70.55, 70.35 really being the near-term bullish invalidation level. That's a major key area of support. So I'm looking for a dip to buy ahead of this. Yesterday, we highlighted that we got that dip, okay? It started to break that 71.35 target. Momentum still looked heavy. As I said in the report, you could get a little bit of bounce, but you're still looking for a drop into this pocket key support, 70.35, 70.55. Well, ladies and gentlemen, we've got it. And we're there right now, okay? Here's what the daily chart looked like. Again, there's that key region of support. This is defined by the reversal day close that you made in November 9th of last year, right off the lows, okay? And then you have the lower median line parallel. Now, this formation obviously is still early, but the first initial touches and the first initial slope looks pretty good. So this is giving you a near-term region of support here that we want to pay attention to, and is also near-term bullish invalidation. So if the British pound has indeed made a little bit more of a concrete, more significant low at this rebound early this month, I'd want to see this hold. I'd want to see this hold. A break beyond this, you have to contend with 69.50, but you're basically looking for a breakdown even further. The low day close for the year of last year comes in down at 167.52. So the risk certainly is for a big drop if we break below this. I'm looking for some support. I'm looking for some divergence, which hasn't panned out just yet. Here's what the intraday chart looks like, a little bit closer of a view. Here's what it looked like yesterday. Okay, so we're right into this pocket here right now. Here's a 60-minute chart. So do we have any signals just yet? Let's check it out. Here's what the intraday charts, or the minute, 5-minute, and 1-minute charts look like. Okay. The only divergence signal that you had was earlier in the session here, earlier this morning, about an hour and a half ago, right into these lows. Momentum started to peak higher as price action made a new low, and we still have preserved those lows. So look for a break of the U.S. opening range. Again, risk is for a rebound here in sterling key while above this November reversal day close. Look for some validation, guys. You don't want to fight a trade like this on the last day of the month, and I'm going to keep stressing that the entire session today. Which is why I'm super nimble. So if we do take a position on this, keep in mind a couple of things. A larger ATR merits a little bit smaller of a position. Also, heading into the close of the month, the start of February trade, you want to stay light in your feet. Also, exercise caution with your leverage in reducing that amount as well. If we break below this, like I said, last-ditch effort would be 69.50, but you're basically risking a much, much steeper decline here. In sterling key if we break below this region at 170.35. Questions on the British pound. Obviously, Super Thursday. Okay, we get the updated quarterly inflation report. We get the Bank of England interest rate decision. Big day for sterling still coming up in just 48 hours. Sterling Kiwi, going once, going twice. That's number 2. Number 3, Pooja, this one's for you. Aussie yen from last night. Here's what it looked like. And 86.82, as I said, it's just rock solid resistance. We saw the reversal off that region twice already. Here's what the daily chart looks like. It's interesting because that's defined by the high day close from last year. All right, or I guess it's the December high day close. But it was also the high day close for this early rally that we made on the 19th. And then that subsequent rally where we tested that high in the 27th, that was also the close of that session. So any way you slice it, 86.82 into 86.92, major key resistance. And again, momentum really having trouble finding any type of upswing here on every subsequent rally. So what does that mean from the daily chart? Well, it leaves the risk to the downside below 86.82, 86.92. Essentially, initially, I'm just looking for a tag of the lower parallel. So that's what I'm looking at with the daily chart. Intraday looks like this. And remember, one other thing I want to note, as far as it pertains to Aussie yen, which is a trade that we've been tracking relatively closely here, broader. Here's what the weekly looks like. The broader premise of the trade, guys, is Aussie yen has made a big low, a big breakout of a multi-year downside slope, and we're looking for a large setback to get back on the long side. Theo, I don't know how to answer your question. Theo saying, how will Super Thursday affect the DXY? You know, the sterling is a component of the DXY, so I suppose you will see some volatility, but I think you're better suited looking at the sterling crosses, to be quite frank. Sterling Kiwi, sterling yen, we've been following very closely. Sterling CAD, we've been following. We have an update on that. I'm not really necessarily going to be looking to play solely versus the dollar, but to try to play the dollar index through it, I think is a stretch. But back to Aussie yen, the basic premise of the idea, as I highlighted in the yearly forecast on Daily Effects, is I'm looking for a larger setback in Aussie yen here to base out, to get a larger scale rally, excuse me. Eventually looking for a push into 90.64 up here, 91.22. So is this the beginning of the onset for a little bit steeper of a pullback? I don't know. But just keep that in mind, that this is sort of a big region that we tagged off of last year. And I do think you need to look for a correction here to get back on the long side. So with that weekly reference in view, and then the daily chart clearly showing the risk below that low day close, or that high day close rather, here's what the intraday looks like. If this slope, Pooja, is in play, I want to see this thing capped by 86.40 on any rally. No change from yesterday's update. So, you know, you're kind of still testing support, 85.79. I'd be looking for rallies to sell, sub 86.40, ultimately looking for a run into 85.42, which would complete, you know, just a 1618 extension off the highs. Last week's low converges on the parallel down here at 85.33. But what's the trade idea from here? Don't want to get on the long side and try to play the rebounds. You are getting some divergence here on the 120 if we do see the candle close at these levels, but I'd rather be looking for a rebound to sell necessarily than try to get short down here or even play the rebound at this point. Pooja, does that help? Does that make sense on Aussie yen? Pooja says, yeah. All right, cool. Also, keeping in mind that you know, the weekly open is pretty much what I'm going to be using as the weekly opening range high. And that's sort of what would be the breakout zone that I'd want to kind of bail on any type of short positioning. Pooja says, if I could only trust the abomination to behave just a wee bit. Yeah, you're telling me. So you know what? Let's take a quick segue here, Pooja. Everyone's talking about the abomination. Here's dollar yen. This will be number 4. Dollar yen looks like this. I got stopped out of a long position on dollar yen last night, trying just to play a rebound off this. The daily chart's really what I want to pay attention to. I was looking at this 50 line, which was nice resistance, break was the origin of a nice rally. On the pullback, you got a little messy here, but until this last drop, you know, yesterday's close came right off that 50 line and bounced and closed just higher. So I thought we could get a little bit of a push higher. I literally only had a 30 pip limit on it. Couldn't even get it. Eventually got stopped out at break even on another pullback. But yeah, for dollar yen, guys, look, it's in consolidation. It's doing what the abomination does. This is why we termed this and dubbed this trade as such. And I still would love to see a dip towards 111.35, 111.80. I think this would be a great region to start look for some long positioning, a stretch lower. In fact, if we take an extension just of this decline here, I would expect, oops, there it is. The 618 comes in right here, okay, 111.80. So either way you slice it, big zone, 111.35, 111.80 is what I'd be looking at as a nice area of support if we get down there. On the upside, no interest until we get through this. Here's what the intraday chart looked like. I mean, even on just a near-term approach, 100 off the high was right here, and it's still stalling there. I don't know, guys. This is dollar yen classic chop fest. And heading into the end of the month, with obviously the BOJs still kind of in the remnants here in the forefront, you got Fed, you got non-farm payrolls. I don't want to mess with this. It's probably going to chop up so many people. So just take it for what it's worth, guys. I'll be the first to tell you when something pops out and there's interest on it, even if it's the abomination. But right now, I don't really see it. I don't really see it. So here is the price action again that I was playing with yesterday. An overnight trade almost took me out at limit. I had the limit right below the actual opening range low for the week, and then it turned right off. Took me right out. So you're seeing some divergence. You could get a rebound. It's ugly. Trade at your own risk. It's the last day of the month. I'd be more so looking at the daily chart and kind of just looking for either a rally near 116 or a dip near 111.35. And I think that's where I'd start to look as levels of which I'd want to operate at. Okay. Sorry, guys. The abomination. It's doing what it's doing. I think Jamie might have a better grasp on that one than I do right now. Moving right along. The abomination isn't completely at a loss because we do have some of the crosses which still look good. Sterling yen, number 5, looks like this. Here's what sterling yen looked like yesterday. You know, they call it the Widowmaker for a reason, so play at your own risk, but it's been super, super duper clean. And it has a big old ATR, so for those of you guys who want a little bit more of a meaty trade, this is the one for you. At this point, though, you're coming into the last support target that we had noted. So for those of you trading pound yen, Pooja says, even Jamie has been giving abomination warnings as of late. You know it's bad when Jamie starts saying that, right? Because he loves the dollar yen typically. But I digress. Back to pound yen. The focus, if we go to pound yen, earlier update in the week, which was on the 29th here, the focus was on this near-term slope, okay, and the fact that the daily chart was coming into a big old resistance region, huge risk for a turnover, both in momentum, both in price, while below 45.60. Well, you got that spill to the downside after coming into the monthly open and failing. That decline now coming into areas of our support that we've been looking at. So the initial targets were down at 143.80, 142.17 into 142.45. We took that out yesterday, okay, and we broke below it. Pushing to the upside, we want to stay bearish below 42.86, inevitably looking for a run into 141, this slope line right here. We're doing that right now, okay? Daily chart, here's the daily chart looks like right now. Okay, there's the median line. Key support, key support, still down here. So you still could get another leg lower. But right now, near term, I'd be very cautious on any pound yen short exposure. So if you're holding short exposure on pound yen, I'd be bringing my stops into profit, if not break even at this point. Looking for a near-term rebound. Could get another leg lower, but heading into that 200-day moving average, I would be looking for more support, for more resistance, yada, yada. It's loaded. Here's what the intraday chart looks like. It's even sexier. There's the break. Bring this into a 2-hour. Kind of match what we were looking at yesterday. Okay, there's the break, and there's that median line catching support right now as you get momentum divergence. Now again, this divergence is weak. It's below 30. Price action at a new low. Oscillator slightly higher low. You do have the risk for a rebound, but this tells you nothing on time, and we're still in oversold territory, so I don't want to fight it just yet. I am looking for some exhaustion here near term, though, for a possible rebound higher. One leg lower would take you to 140.60 initially. On the daily chart, that confluence looks like it's 140.60, and I was looking at this yesterday because obviously the time aspect here looks like it's 140.60, right? On the intraday, when you take into account more timely slope here, it brings you down to 139.60, another 100 pips to the downside. If you look to the right, it doesn't really line up quite as well. So depending on where we are in time, guys, if we break lower, don't fight this thing. 140.60 and 139.60, I'd be looking for exhaustion at those two levels, with this being the final bullish invalidation. If we break below that, I think pound yen completely collapses. Not my favorite idea, and not my favorite scenario, but certainly looking for exhaustion at these levels here for pound yen. Any questions? Super Thursday, this one's going to be a doozy, especially the fact that it's just the second day of the trading month, and you're on the back of the Fed. You still got non-farm payrolls on tap, both of which again will be somewhat isolated from pound yen, but the market attention is there, the excitement is there. So keep this on radar for sure over the next 2 days. So the levels remain unchanged. The only thing I do want to highlight is that you want to keep adjusting this retracement here. Okay, the retracement that you're using on the intraday chart, use that low. As we make a new low, you're going to have to keep adjusting this retracement. Obviously, these levels are here for reference. They mean nothing right now unless we make some sort of turn. But on a scenario where we register a new low, just be mindful of that retracement, tack that onto the new low to give you guidance on the upslope. Okay, that's number 5, pound yen. Any other questions from last night's updates? Okay, I want to jump into Euro Key. We'll jump into Kiwi Dollar, Sterling CAD, and then we'll jump into your questions. Kamwal, I haven't forgotten Aussie Dollar, no worries. First things first, let's hit Euro Key. Looks like this. The only thing I wanted to highlight here is we had Euro Key highlighted on the previous day's update. Here's what she looked like. Okay, and the only thing I wanted to highlight is, we're still holding this downside slope, guys. It's been a tough trade because Euro and Kiwi have kind of both been doing their own thing. But all I wanted to highlight is that you've set up a pretty nice weekly opening range at this point. You're still below the median line, which is holding very nice resistance, and you're getting some divergence. So if you do see a topside pop above 147.78, you have a clear-cut rally, I think, into 148.74, clear-cut target into that region. Keep in mind you have Kiwi labor employment numbers and unemployment numbers later tonight, or after this afternoon, I should say, after the U.S. close. So, could prompt some volatility on the Kiwi crosses. A break below 146 is what's needed to really get this thing going. Keep in mind where we are in the daily chart. If this thing breaks any lower, look for 145. It's another 100 pips to the downside. But daily chart warns. You got divergence. Looks like you could see a little bit. Market is vulnerable here for a little bit of a pop northbound of 47.78 if we break this. And this is the objective weekly opening range high. So everything kind of shaping up pretty nice on Euro Key. Okay, that's number 6. I want to just segue into Euro Dollar since we're talking about the Euro. Here's what Euro looks like. It gave us a topside break in overnight trade. But what I did want to highlight is this. That's what I wanted to highlight. There's my notes. It's still holding below this median line. And that's what I need to see. If we clear this, guys, the target hasn't changed. 108.20 is a 50% retracement from the decline off the high that you made in November. Obviously, that's the election high. You have the 100-day moving average, which cuts just ahead of that. You have the 50 line of the current operative upslope. All that converges right here, right around 108, 108.20. So the target is pretty clear as far as an upside break, but watch that median line. This parallel has caught or previously caught 3 previous day spike highs, and we're testing it right now. So I don't really have much to do on the euro. If this slope is being invalidated with this topside break, any pullback should hold. You have the weekly open and former slope resistance now support right here at 107.20. So if this is a legit break, any pullback should be limited to a downside move beyond 107.20. Topside pop, 108.20 is your first target. All right. In fact, even on the intraday, you could probably just highlight last week's high for intraday price action, which converges on current median line resistance. All right. That's euro dollar. So we did euro, kiwi, euro dollar. Here's kiwi dollar, kiwi dollar, kiwi dollar. She's making her way through the highs. 7,300 was a big level for me. We're trading just above it, but there's not much push. And it looks awfully like it did last week. So I don't believe it. If it was a legit break, I would have wanted to see a little bit more of a thrust to the upside. We talk about this all the time. So I'm not going to chase this. If you're not already long, you got nothing to do here on Kiwi dollar. If you are long, you're looking for targets at 73.50. That's the best defined target I think you're going to get. It's the upper parallel. It's been a little messy here. Obviously, you've gotten a couple of probes through, but it also consists of a basic 786 retracement from the decline off the high you made in September. So a nice level either way you slice it. What would I need to see to get back on the bearish side? I need to see move back below 72.90 here. To get comfortable trying anything on the short side of Kiwi. Otherwise, you're looking for a validation of whether this is a legit break or not. Again, the daily chart, it's a big region, guys. It's a big, big region. Just to put things kind of in perspective here, what a big pivot zone this is. Low day close, March 2015, July high day close. Really nice pivots in price. Basic trendline resistance off the highs that you made from last year in September. Former trendline support from the lows that you made last year in January. It's all stacked here. So if this is going to be a break, I would have expected to see a much, much more concerted advance. I'm on the lookout for exhaustion still. I would need to see a dip back below 72.90, 7,300 to, again, start favoring shorts in Kiwi. Who knows? Today's data print might be it. Also, obviously, you have Fed on tap. If there's anything less hawkish, more dovish in the commentary and the rhetoric, that could give fuel to the dollar, which would be very hard to give this a downside move. One thing you want to note is tomorrow is not a quarterly meeting for the Fed, guys. We're just going to get the release of the interest rate statement, or the policy statement, rather, in the interest rate decision. That's it. No updated projections, no presser with Janet Yellen, none of that good old stuff. So it should be pretty clean cut and simple as far as the initial market reaction is concerned. We'll go over the scenarios that could play out tomorrow, and certainly, again, all the dollar crosses in tomorrow's webinar. Any questions on Kiwi? Okay. That's number 8. Let's just hit Aussie while we're at it. Number 9. Aussie's at pretty much the same type of deal. I was talking to Pooja about this earlier. Look at the daily chart. Big resistance. This is a trend line that dates back a little bit further. I don't really want to stress this one. Someone was talking to me about this online. I'm not going to stress that. What I am going to stress is near-term upslope here for this median line formation. Again, if you take a parallel off that, extrapolate it off the low from back in October, it must have been, you can see that almost caught the highs. Upper median line parallel, all right here. As I said yesterday in the webinar, if we're turning, any advances should be capped by the monthly high day close. And it's exactly what we're doing right now. We came right into the high day close and we pulled off. Is that it? I don't know. Dollar's pretty much struggling here. But if we get a pullback in the dollar index and we do see this support hold, it might be the bounce that we need to get Aussie going to the downside. So watch this region of resistance. This is my last ditch effort. Again, if I get no short signals into the U.S. trade signal, into the U.S. trades into the U.S. trade session, excuse me, and you see this thing go northbound, basically the highs we just made, I don't want to touch it. You know, in that scenario, you could see a rally to last week's highs. Next upside target isn't really until like 76.46. So similar deal here. Looking for exhaustion in Aussie dollar. Long bias is at risk basically right here, well below this region. Let me copy this high day close. 75.77, 75.78. Comwald, does that make sense? Any questions, Pooja? Look at the Aussie dollar 5 minutes too. Sure. Let's do that. Okay, so you're shaping up with a really nice U.S. opening range right below the London highs, which gives you a nice opening range play just right off the bat. Obviously, some strong divergence into that high here was a really good signal as far as trying to get on the short side. Even here, you had some really strong divergence into the highs. So yeah, look for the U.S. trade session. The only thing I don't like is the nature of this advance. Could be a 1, 2, 3, 4, 5, which would give us, you'd look for another low here on a three-way bounce, but that would just be correctionary. So that's a little concerning. Again, I'm not a big stringent user of Elliott, but when the wave count kind of points out to you and just sticks right out, something to pay attention to. Yeah, I think it probably probes into a new high for the U.S. session. So let's see if we can't get another exhaustion signal here. Already takes him off around 75.79. Okay, so you're playing it like super short term, or are you on the long side here, Conwall? If you're on the long side, you got out. I mean, you took some off at a perfect level, okay? I would have a stop just below. I mean, it depends where you're interested. You are long. It depends where your entry is, but initial support, even though we probed through it right here, I'd still be looking at this pivot right at the weekly open because last week is the same exact pivot zone, which was last week's pivot or weekly open too. So you're looking at 75.15 to 75.55, let's call it, as the initial support. So I'd have a limit there. If we break below the Asia lows, obviously, you know, that's kind of the indication that we were right on the turn. So good exits on that Conwall, but I'd definitely be looking very interested here. Leave a little on because if you do get the breakout, it's going to be a nice run, I think. But I'd have my limits on the inside for sure. My thoughts exactly on the Elliott wave interpretation. Wait for that new high, and then we'll see. Yeah, Pooja, that's kind of just my initial take looking at it real quick. Look for another exhaustion there. And again, end of month, this is the time. You know, of all the times that you would expect to see these, oh, well, you know, ideal scenario would be an exhaustion stretch into this region, but let me just jump into the trade now because I want to be in it. Today's not the day to start doing that. So just keep that in mind. Pooja says Kiwi looks similar too. I'm always down to take a look. Yeah, I mean, it's even clearer here, I think. Yep. Same type of deal. Okay, so we got Aussie and we got Kiwi, 8 and 9. Number 10, let me just hit Sterling CAD real quick. This is also a trade that we've been following. Here's the previous day's update on Sterling CAD. Sterling Kiwi did, Sterling CAD. And here was the basic consolidation pattern that we were looking at early in the week. I had preferred a topside break, but it's not what we got. We got a break below 64.28. That gave us a downside move. 62.95 is the initial target, this median line. Basically, 61.90 would still be a nice move of which I'd start to look for some support. So here's what Sterling CAD looks like on the near term. And we're right now, going through that 62.95 level. And again, 61.93 is where I'd be looking at for near-term support. It's a swing high in price, so it's nothing major from a Fibonacci level, but certainly we have very nice slope action there, and that converges basically heading into tonight. So another trade I just wanted to bring your attention to because you got a really clean break. Also, if we take an objective retracement, okay, um, an objective measured move rather of the consolidation break, a measured move of this wedge pattern, okay, gives us a target of 161.87, which is right below that 161.94 high. So either way you look at it, sort of a really nice spot right here to start to look for a little bit more support on this pound CAD breakdown. Again, the daily chart, pretty clean. Pretty clean. The broader trade still remains constructive, I think, off this low. All you've done is made a full round trip for the monthly opening range, playing corrective pullback into the close of the month. No big deal. Still looking for some more support down to 161.87. That's number 10, pound CAD. Any questions on pound CAD? All right, I got Aussie dollar for you, right? So we can cross that one out. Let's go into, we got dollar yen? We got dollar yen. Euro Oz, I had this on my list too. I haven't touched it, but looking for something here. You got a very clean weekly opening range right below resistance. Any way you slice it. So look, I'm not going to stress this formation because we already made a break and a pivot back above, but I just want to leave it there for now because the slope actually looks pretty good on the ascent. Long story short, look for this weekly opening range break. And if Aussie all of a sudden starts to collapse off resistance here, top side targets would be 42.90 into the 2016 low day close. That's 143. So again, as far as Euro Oz is concerned, just look for a clear, concise break of the weekly opening range. If it breaks to the downside, there's likely tons of downside to go. The only problem is I don't have any targets, so you're on your own to 139.64. And that's just a soft target. That's not even a major measured move of any technical merits. So just wanted to highlight that the setup is there. You know, look for a break of this pretty well-defined weekly opening range. So that's Euro Aussie number 11. Let's jump into the commodities. A quick recap of where we are on the gold trade, which certainly we've been tracking very, very close. Look, it's making a breakthrough resistance, and it's likely that this recovery has more to go here, specifically if we push through 1204 on a closed basis today. This constitutes 100 off the low right here at 1203. 1204 is a 618 off the high, my favored confluence regions of resistance. So I'm looking for exhaustion up here in gold. I'm not really looking to play the long side anymore. Inevitably, I want to buy a pullback because remember, the broader picture for gold remains constructive. I just think that this correction off the high still has another low in it before we really make the resumption of the broader rally off the December lows. So no change in gold from here. You know, I'm still looking for a possible pullback again, but near term, look for some exhaustion at these levels. I want to see today's close. If we close northbound at 1204, forget that idea. If we close southbound of 1204, I think that's sort of the exhaustion you'd be looking for a pullback. Initial zone would be 1196, again, just near those lows. Former median line resistance. Actually, I'm not going to stress that since we didn't see too much play off it. This would be just too clean right here. I'm kind of thinking you see exhaustion pretty close by, guys. Dollar index at support. Aussie dollar at resistance. Gold at resistance. So if the dollar shows a bounce, gold down, Aussie down. might be the play. With the same respect, why this is important, with the same respect, if dollar breaks down through the support and Aussie breaks through, you got the clear topside targets in Aussie. Clear topside targets in gold would take you into 12.12. This region right here, this median line, key resistance still remains at 12.20, 12.18. We talked about that at length all month long. And on the Aussie, obviously, topside breach from here, like I said, 76.46 would be a basic 786 from the highs there. Okay, so that is gold. Any questions on the gold trade? I was expecting a hold into 1204, 1203, I'm not going to lie, and I still think you could be teetering there right now. So let's see if this, if the U.S. Open finds some resistance here or if we push through. You haven't gotten an hourly close. Divergence on the 30-minute. I'd be looking for some exhaustion here. Nat gas. Or let me hit copper first since we're just on the hard commodities. Here's what copper looks like. So Conwall, I have a topside break, okay, of this formation that we had looked at earlier in the week, which keeps the focus higher above 270, but I don't have much room to the upside because remember 272 is still the region of resistance of which we have a level of which we have not closed above at all and was the measured move of the consolidation break that we made all throughout last year. So it's super tight on the range. I don't know what you want to do with this. If you're holding longs, again, watch that 272 level, which is right here, coming right up on it. If we break back below 269, 269.5 here, I'd be looking for another low beyond 264 actually. But don't stress this too much. Again, it's the same trade we were talking about yesterday. It's a chop zone just below resistance into the monthly close. If anything, I'd expect to see this thing close somewhat near the highs here, just on account of your basic monthly opening ranges to the break to the upside. Any specific questions on copper? Nothing here to get me too excited. Not yet, at least. Downside target there is with the weekly opening range low if you do see an exhaustion spout here. Okay, yeah, I'd rather be in that position. Conwell says he's short from 270. I'd rather be in that position than trying to do anything on the long side here. I mean, again, just the daily chart. You're at a region which has been, frankly, much more fruitful on the short side than on the long side. So get through 269 here, and I think you get a decent pullback on this Conwall. If you see failure here, especially if it's like into the 1030 slot for the U.S. Open here, if you see failure on a pullback into 269, I probably bail. But that's sort of the region you'd need to get through. You got the weekly open, again, the upper parallel of this formation, which hasn't been, again, not too many plays, but if we take those lows, pretty darn close, right? So get below 269, I think you'll be okay. Okay, that is copper. Now we can jump into nat gas. Copper was number 12. 13. Nat gas will be 14. All right, making good time today. Here's nat gas. All right. Well, we finally got something here. Here we go. Yeah, you're coming into a big support zone. Here's your yearly open. Where is it? Where is it? Okay. Huge zone for so many reasons, of which I'll explain right now. Uh, Initially, it's a 50% retracement of the advance off the lows that you made in November of last year. Cool. It's just a retracement though, right? Secondly, 100-day moving average. Slides right into that zone, being checked right now as support. Thirdly, the high that you made back here in May of 2015, which was indeed, actually, if I'm not mistaken, no, it was the May 2015 high. That's right. A nice pivot here, converges right here. Add to that upslope support, okay? This is basic trendline support, taking off the lows that we made last year. Take a parallel off that from the low that we made here in February of last year, caught the highs in April of last year, caught the lows, nice pivot. Break was the origin of a nice rally, now converges on that same region, and all of these converge right around this 309, 311 region. So big region of which I'd be looking at. If that weren't enough, it's also the objective monthly and yearly opening range lows. And that takes you a little bit lower, okay? The low actually extends into 307. So huge region, okay? Huge region. If you're holding shorts, certainly into 311, 307, you want to be shaving some of those off, bring your stops to break even or better. A break below this, in my mind, certainly would constitute a simple and objective break of a key region of technical support, and the monthly opening range would give you a short side bias targeting 293. The 200-day moving average comes down here at 282 or so. But certainly big risk with a break below this region. Huge. Let's see here. So let's see if we can adjust the intraday chart for you. You can get rid of this at this point. Okay. Trying to decide whether I want to stick with this slope. It's not the cleanest. Okay, I don't want to stress this slope and start chasing things that's not necessarily there yet. So let's just keep this as basic as possible. Long story short of it, Conwall, is you want to be watching for that support right there. Look for a reaction. Look for an inflection point. Some sort of play off that region. Nothing really to work with here. At the end of the day, a downside break, you're looking for 290. That's just a basic 618 retracement. Be mindful of the low that we made for the year and the yearly opening range low at 307, but there's downside target you might want to watch as well. There you go. Those are the near-term targets I'd be watching. Resistance, she's a tricky one. I'd want to see Friday's low. Definitely offer some resistance. And bear with me one sec. This is going to be too steep, I think, but give you sort of a target right there as resistance. Support on a downside break below 307. Look for basically 3 flat, 301, and then 293 would be the next downside target. Okay? I hope that helps here, Conwall, on natural gas. Just keep in mind we're testing the bottom of the range. So I'd be looking for a reaction at this region. Again, noting that you're definitely at risk for a rebound of sorts off 307. He says, yes, sir. Okay. I'm actually good on time here. Is there any other questions, trade setups I left out that you guys were asking about, or anything ahead of the major event risk on tap? Again, we'll go over all the dollar crosses ahead of tomorrow's Fed interest rate decision. and we'll see where the Fed Fund futures sit. I was surprised to see that drop actually this morning, so and expectations for the June read. So we'll be tracking that one over the next couple of days, specifically into that release. Pete wants to look at dollar CAD. Here's dollar CAD. Well, here's crude, by the way, just to keep you in mind. That's also just continuing to, range. I really have nothing to do in crude. Dollar CAD, biggest fake out ever. If we get 30, I'll love it. 130. Until we do, we've tried to call low on this, I think, too many times that I'm not really looking to fight it. Still the same region. Lower median line parallel for this formation. Let me bring this to a 4-hour chart. Lower median line parallel of this formation. Obviously, we talked about 30.15, 30.25 the last couple of weeks. Excuse me, that's where we bottomed out the monthly low. But yeah, like I said yesterday in the webinar, I don't know if you were there, Pete, if you put a gun, again, I'm not really trading dollar CAD, but if you put a gun to my head, I'd have to say I like the long side just on account of I think crude is in for a bigger setback. Now, I could be wrong. Again, I'm going to keep bringing this chart back and boring the hell out of you guys by showing you the weekly chart of crude and the level of which we exactly peaked out and teetered out at the beginning of the year. Huge level. So yeah, I think you get a little bit more of a pullback here. Does that suggest that we should be looking for a rebound in CAD? Maybe. I don't know. I think 130.06 would be the level to watch, those swing lows that we made back here in October. But more importantly, basic 3-point touch, trendline support, and the lower parallel. So you got 3 different things, all measuring around that 130 handle. That's the last ditch effort. If it breaks there, I got no clue. This thing could just completely collapse, Pete. You know what I mean? It's been a wild ride since the start of the year if you've been trading dollar CAD. But what's interesting is we've been waiting for this 130 for weeks, and it keeps turning along that slope. Now that slope comes in, basically just right around that same area. So is that what sort of magnet then snapback? Maybe. Especially if that low today, okay, maintains a divergent signal and momentum. That could be a really nice exhaustion sort of rebound play off key support. But that's my focus. Hope that helps. Not the cleanest chart here, Pete. Let me just clean this up for you real quick. There you go. Dollar yen. Someone saying abomination below 113. Well, there it goes. 112.50 on tap. So I believe that would put downside break on Aussie yen. Beautiful. 85.42, 85.33 key support zone that we're looking for here in Aussie yen. Keep that in mind heading into the U.S. trade session. Not bad. All right, guys. Conwall, nothing from yesterday. He says anything on crude. Here's the crude chart. I mean, I don't even like the trading ranges, to be honest with you, but this is what I would be looking at. You got a clear weekly opening range just below the 618 retracement, which takes into 53.48. This is a retracement from the highs, the near-term decline that we made. But I don't have any structure to it, and that's what bothers me here on crude. Again, I don't have any justification that this is a high yet, but if it is, you should expect to see some resistance near term below 54. Again, I don't know that this is a concrete high, right? This could be a simple ABC correction, and we could be right back on our way up. I don't know. All I know is resistance is here. Monthly open comes in at 54. You know the weekly chart. We've already talked about how key of a region this 54 into 55 is as stands. So, if anything, I'd like shorts against that region. And that would coincide again with a dollar rebound. 99.53. Keep that region in view on the dollar index, which just broke support. Again, that key region upcoming in just a couple of pips. All right, we'll wrap it up there, guys. I am over on time. I want to thank everyone who attended today. We'll be back tomorrow morning at 8:30 Eastern for a quick recap ahead of the FOMC, what we should be looking for. Watch this dollar move here, guys, into the end of the month. Please keep in mind those end-of-month flows can offer up some, again, pretty radical price action. Best of luck trading, and I'll see you all tomorrow morning. Cheers.